Hey, welcome back to another episode of Charting Essentials with me, Shaun Murison, Senior Market Analyst at IG. Okay, so how are we going to do this? We are going to look at little ideas from previous episodes. We're going to extract those little puzzle pieces. We're going to put them together and develop a very, very simple swing trading strategy. What is a swing trading strategy? Well, it's a strategy where we're looking to trade with a trend. We're looking to capture portions of that trend. So looking to compound movements within a trend, whether it's an uptrend or a downtrend. So we keep using that word trend. Where do we start? Obviously with trend. Now, if you remember the moving average, moving averages are a very, very simple way of helping determine general market direction or trend, right? So what do? How do we do that? So simple way, a common way of using it is saying, well, is the trend up or down? And we look at the price relative to the moving average. So if the price is above the moving average, so the price is above average, that trend is considered up. If the price is below the moving average, or price is below average, that trend is down. Okay, so step one, so the first filter for the trade is looking at a long-term moving average, adding it to our chart, and assessing what side of the market we want to be on. In an uptrend, we're looking for long positions. In a downtrend, we're looking for short positions. Step two, the oscillators. The oscillators, stochastics, RSIs. Remember those guys? Well, they give us indications of overbought and oversold. What is that? Oversold is a suggestion that the market has fallen, could be setting up to have a brief rally. Overbought suggests that market rally has maybe gone a little bit too far. Maybe we could see a short-term decline. All right, so now we've got a trend, uptrend. We've got our oscillator to help us with a short-term momentum, like a stochastic or an RSI. And we're looking to try to filter out the signals from that oscillator by only taking those signals in line with the trend. So in markets in an uptrend, we've defined that with the moving average. Then we look at oversold signal as a possible buy signal. Now here's something that you can add to that. I mentioned right in the beginning that my favorite indicator is a horizontal line on the chart. So we find those few things line up. We've got the market in an uptrend. We've got the market that's oversold, but it's also sitting at a support level. That might be an indication for me to place a long trade. Look, you can take that basic concept and you can flip it upside down for short entry. If you're trading, placing a trade with the expectation that market's going to fall. In that situation, price would be below that moving average. So trend is down. Then we look at that overbought signal and say, okay, well, that might be the trigger for that short entry. And then you could add that further confirmation by seeing that overbought signal at a resistance level as confirmation for you to place a trade. Now, we can still use those horizontal levels if we're in an uptrend. We've got those horizontal levels to help support our entry, but giving ourselves targets on the upside. So if you're in an uptrend and you've bought off support from oversold territory within an uptrend, then we might look at levels of resistance as targets from that move higher. So hopefully it gets there because it means the market's moving in the right direction. If you're trading short, then we'd look at levels of support as downside targets as that market's falling. And if it's moving towards those support targets, you'd be winning, you'd be making money, trade's moving in the right direction. Okay, so we've got our signals. We've built a sort of an idea of where we could look for entry signals, where we could look to place trades, where we could look to take profit. What's missing from that equation? Well, probably the most important thing is managing the risk. We expect the market to go one way, sometimes it goes the other way, right? So what do we do? What is the most important thing according to the turtles? Remember the turtles? Turtle traders said that it wasn't actually about when to buy or when to sell. That was a simple mechanical strategy. It was really about understanding the volatility of each market and managing your risk accordingly to the volatility within that market. And to do that, they'd use the average true range indicator. What is that? Here's the quick crash course. What does this indicator do? Quite simply, it measures price volatility, or range of price movement over the course of a day, an hour, a week, a month, whatever time frame you choose to apply that indicator to. So now that we know what the average true range does, we can use that to help determine a stop loss distance. So a popular way of using the indicator is when you add it to the chart, look at the value. Use that value or a multiple of that value as a stop loss distance from your entry point in a trade. So if you're doing this, your stop is now accounting for historical market volatility. So once you've determined your stop loss distance, you still need to determine how much of your account you want to risk in any one trade. And then very, very simply, you can use this formula if you're trading commodities to determine your position size. Or if you're trading shares, you could use this formula. So if you're trading in an uptrend, this pattern might be a bit of a warning sign. That trend is about to reverse. And if you're trading within a downtrend, and you see this pattern, that's a warning that that trend could be coming towards a short-term end as well. So when you see these patterns, suggestion that the trend that you're in, if you're trading with that trend, might be setting up to continue. So maybe it's a signal for new entries into that market or for accumulating positions into that market. If you're the other type of person who has found this content useful, insightful, and helped you along the way on your technical analysis journey, please do like, subscribe, and share this video or some of the other videos. Otherwise, test the stuff out, open a demo account, ig.com. Oh, I hate these long goodbyes. So, good chat, everybody. We'll see you soon.